And it's on an improving trajectory, is it, sir?
Absolutely.
It's picking up pace. All right. That's important. I mean, a top banker always has a bird's eye view on what's happening, and it's good to hear that from you. Mr. Chadha, just a quick word on this entire fintech ecosystem. So there are 2 points. One, RBI has come down pretty hard, right? There are on the entire digital lending ecosystem. I mean, at least it's tightened the screws, tightened the rules. So it's not a free for all. There's talk of many a business model, BNPL, etc., no longer viable. Banks were also very aggressively tying up over the last year or so with fintechs, etc. Could you just give us a sense of how this space is likely to evolve? And is there any specific impact because of what has happened to Bank of Baroda's business per se? Go on.
So I think when it comes to the digital piece, the impact is again in terms of organic business, and 2 in terms of what you can do in collaboration with fintechs. So I think both these trends are likely to continue. Talking about BOB again and referring back to our numbers in the last quarter, you would have seen that the unsecured personal loans actually were up nearly 100% YOY. That largely has been because of the success that we have seen with Bob World, which has acquired something like 22 million customers in a single year, giving us operating leverage, which is really unprecedented and which is something which is likely to play out in the future also. Now, in terms of the RBI changes, I think we have to see it in the context that the regulator needs to strike a very fine balance between ensuring that there is innovation, but also when certain players or certain businesses reach critical mass, that there is some regulation. So I would not really see it as a clampdown, but the fact that now the sector is mature enough for the regulator to make sure that there are some rules to guide the growth going forward. I think one of the things which has been very apparent is that the paradigm in terms of the banks working with the fintechs, with NBFCs, has firmly shifted towards collaboration. And I think that is something which is likely to get strengthened even further, so that the respective strengths of the players, banks again in terms of having a low cost liability franchise, being regulated, mature risk management systems, and fintechs in terms of driving innovation, bringing costs down. I think if these 2 trends were to come together, it should have an overall salutary impact on the entire financial system.
All right, Mr. Chadha, we don't want any near-term guidance. I think you're being a little bit cautious on that front. But in the next couple of years, where do you see the ROEs headed? I ask you this because margins are improving, credit costs are cooling down, and OPEX cost is reasonably under control. The broad estimate is you'll move from the high single-digit ROEs to, say, around 12 to around 14%. Would you concur? Do you want to give us a number? I reiterate, not in the near term, but say in the next couple of fiscals.
So I think the drivers that you have very correctly identified are indeed there and they're operating. And I think out of these, the 2 powerful drivers are going to be the improvement in terms of credit costs, which is likely to continue through successive quarters. And also the fact that for banks, the model again has changed in terms of growth, not necessarily having a concomitant impact in terms of the cost base. For example, again, if you would look at BOB, the fact is that we have, as of now, fewer branches than we had 2 years back. We may also have fewer people on our permanent roles, but in terms of the growth momentum, it is actually taking off. So therefore, I think this change which has happened from the time when if you needed to grow business, you needed to grow costs in tandem, to again now when actually costs are not likely to really move in the same proportion, is also going to have a very powerful impact in terms of operating leverage. So I would concur with your views that in terms of return on assets and return on equity, we should be seeing a broad-based and a secular trend towards improvement.
All right, we'll leave it at that. Mr. Chadha, thanks a lot for joining us and speaking to us on CNBC TV 18.